NFTs have hit the spotlight in Hong Kong today. Welcome to the Daily Forkast, June 7th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Hong Kong has its sights set on the NFT sector today, with regulators warning of a crackdown on trading licenses, while the Artaverse NFT and local art exhibition is making its debut at the city's iconic harbourfront space. We'll take a look at that, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a couple of issues for the world's largest cryptocurrency exchange, Binance. First, according to a Wall Street Journal report, the US Securities and Exchange Commission, or SEC, is looking into whether Binance violated any rules regarding the sales of securities when its BNB token was sold through an initial coin offering, or ICO, back in 2017. The report said the ICO should have been registered with US regulators if it amounted to the sale of securities. BNB is currently the world's fifth largest cryptocurrency, with a market cap of $46.6 billion as of Tuesday morning Asia time. Meanwhile, Binance has clapped back at allegations made in a Reuters investigation, accusing the firm of serving as a conduit for at least $2.3 billion worth of illicit funds. It called the report a, quote, breathless, pearl-clutching piece. A Binance spokesperson told Forkast that the article uses outdated information from 2019 and unverified personal attestations as a crutch to establish a false narrative. On Monday, Reuters reported that Binance processed transactions from hacks, frauds, and illegal drug sales from 2017 to 2021. The news agency said it worked with blockchain analytics firm Crystal Blockchain and Chainalysis to track such data, while examining court records and statements from law enforcement. However, back in April, Chainalysis told Forkast there's one key detail you should be aware of about crypto crime.
Crime gets so much attention, but it's really less than 1% of transactions that occur on the blockchain, and we really have to try and keep that into perspective. It's important to tackle it, but it's also important to recognize how much value the ecosystem brings.
Meanwhile, NFT investors in Hong Kong have been warned about a crackdown on trading licenses by regulators. The city's Securities and Futures Commission, the SFC, said on Monday that some transactions involving tokens may fall under their purview. So-called collective investment schemes involving shared ownership of fractionalized or fungible NFTs need to be licensed in the Asian financial hub. The SFC also said it wanted to remind investors about the risks involved with investing in NFTs. It added, however, that genuine digital collectible NFTs are still not regulated by the authority. That warning comes as the Hong Kong-based NFT and metaverse investing giant Animoca reported bumper earnings. The gaming and venture capital firm said the total value of its investments was more than $1.5 billion as of end of April. Bookings and other income, including NFT sales, generated more than $500 million in the first 4 months of 2022. That's according to an unaudited release on its website on Monday. Animoca earlier this year raised $360 million in funding. That values the company at over $5 billion, more than double what it was estimated to be worth in October last year. You can find those stories and more at Forkast.News. Staying on that theme, seems there's no stopping Hong Kong's aims to promote digital art, with the Artaverse outdoor NFT and local art exhibition kicking off its debut event over the weekend. Forkast's Danny Park went along.
Hong Kong is not only one of Asia's financial hubs, it's also a center for fine arts. And with non-fungible tokens, or NFTs, being the new trend in art, Hong Kong has gone all out on showcasing what the city has to offer. Artaverse is the latest example. Running until June 12th, it's taken over 150,000 square feet in the city's iconic central harbourfront event space to exhibit both NFTs and local art. Global financial services giant MasterCard is on board as the leading sponsor, with Animoca Brands and MetaMask among the 100 other notable partners. Artaverse offers local contemporary art with immersive cutting-edge blockchain technology, covering an array of NFT art from the familiar generative NFT art collections to more experimental installation art. One local street artist told Forkast the reason why he merged NFT technology with his works.
It's refreshed it in a way that I can bounce from a physical to a digital, and that for me is ultimately the best place to be, because one gives me total inspiration and freedom, the other one sort of helps me tune it a lot more. So it's really benefited me as an artist in quite a few ways.
Being its first year, Artaverse says it aims to build a Web 3.0 art community in Hong Kong, while one art expert told Forkast that NFTs could play a big role in expanding the art community.
I think through the NFT, we can learn about the art world not only in the museum, not only as expensive industry, but everybody can connect with art.
Other than exhibitions, Artaverse is staging live music performances by prominent local artists and DJs, as well as talks by tech and art professionals and special events such as a digital art workshop aimed at helping children explore the concept of NFTs. And although local contemporary artists are taking center stage at the Artaverse, Angus Lowe, CEO of Coin United, Asia's largest NFT collector, says countries of origin will not matter to the future of NFT art.
Actually, it's not only Hong Kong. Like basically on the NFT, there's no boundaries. There's no let's say a Hong Kong project or US project or a Japan project. Basically, when you put the NFT on the platform, it's all international. There's no boundaries.
For Forkast, I'm Danny Park in Hong Kong.
Terraform Labs' Take-Two hasn't gone down too well, with the new Luna token reduced to just a fraction of its debut price within days. And the discrepancy between the old Luna and the new token led to an exploit, where an attacker drained $2 million from the Mirror protocol. This raises many questions about security and stability. Damien Lowe, CEO of Matrix Asset Management, joins us to discuss more. Good to see you, Damien.
Thank you for having me, Megha.
Damien, Terra 2.0 airdropped 70% of the new Luna supply to holders of the old Crash tokens. And while we've seen the price of new Luna crack, its critics are also questioning how the project will support itself without a stablecoin.
That's true. It remains to be seen overall whether it can be a success overall. Having said that, if you've looked at comparisons with the other L1 coins like Ethereum, they had a lot of use cases even without a stable coin. So yes, it's possible, but Terra is definitely known for its stablecoin, and a lot of its ecosystem was built around it. So I think you're right, it remains to be seen whether it can be successful. There's also the trust factor. Once it actually breaks, that it's really hard to gain it back.
Last week, the Mirror protocol suffered a $2 million exploit, and the price difference between the two Luna tokens is being blamed for it. And this follows a $90 million exploit on the same protocol on the old Terra chain, which was only just found out. Who is responsible for these?
I think technically it's the validators, because the validators are the ones that actually feed the prices in overall. It's actually also overall the whole Terra team. If you think about it, I think there was obviously a motivation for them to really push out something to really replace the old Luna, the Luna Classic. And not everything, is possible to be thought through in such a short time. And I think because of that, a lot of it was overlooked or not even thought about at all, and I think that's partially why the exploit actually happened. And I think you'll start to see a lot more of that, because overall as a network it's really complex and it's not really easy to think about all the different aspects that might break, especially if you rolled out something weeks after the initial Luna Classic went down. So be on the lookout for more of those kind of things, but hopefully not.
Well, these exploits and collapse of a chain which was worth billions of dollars at one point raises questions about governance and the need for oversight. What do you make of the recent regulatory announcements coming in from South Korea and Singapore on that front?
So I think everybody can say that it's the collapse in Lunar and the stablecoin UST wasn't good overall for crypto initially, but I think the silver lining that you can take away from that is that it's now forcing regulators to actually take a closer look at it, which we more than welcome. We've been always welcoming of regulation overall, and for regulators to give clarity on the overall industry, especially for DeFi itself. And this has really forced them to look at it and have a stance on it overall. So Singapore and Korea have started to take a look at it a little bit more, and in Singapore's case you can see that they're leaning towards more DeFi being okay and something that should be worth exploring from an institutional level, but less so for retail.
Greater regulatory oversight and framework would be critical for crypto industry to mature, wouldn't it? Thank you so much, Damien, for joining in today.
Thank you, Megha.
And that's the Daily Forecast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Megha Chaddah. Until next time.